Hello, everyone. Welcome to my weekend market analysis. It's great to have you join me this evening as we delve into the gold market dynamics. Well, the gold market continues to spring up surprises as we head into the final days of this month of April. So we saw last week gold extended its record breaking run, pushing all the way up to test the $3,500 zone, as you can see here. And of course, this happened on Tuesday's trading session. And of course, the weakness in the US dollar, some sharp criticism from the US president towards the Federal Reserve chairman, and rising tensions between the US and China all helped to boost demand for the gold commodity. But around the middle of the week, we saw the price of gold made a U-turn and started to tumble, as you can see here. This happened as the US dollar found new strength. Traders were becoming more convinced that the Fed will likely keep interest rate unchanged at their next meeting, with market odds rising to as high as 92%. And of course, this shift came after Fed officials gave more cautious wait and see comments throughout the week, which helped the dollar recover at least in the short term. Even with all of this pullback we see here, gold is still finding buyers every time it dips, especially around this $3,260 area, duly highlighted right here, as you can see. I want to consider this area as an important support zone, as we saw investors jumping back in at every single opportunity as they see the lower prices at this level as a bargain they just couldn't resist, rushing in to buy before prices get expensive again. And their buy pressure is helping to lift prices back up. As you can see, it happened here on Wednesday. We saw the same thing happen on the final trading day of last week, giving some hopes to the price of gold. And for me, at this point, I still want to consider the bullish momentum still very strong. And honestly, it's making it tough and discouraging market participants from selling gold aggressively. Now, looking ahead, we've got a busy week on the calendar. Big UX economic events are lined up. So, on Wednesday, April 30th, we are looking at the ADP employment change, core PCE report, and of course, the gross domestic product annualized for quarter one. Then fast forward to Thursday, we are looking at the ISM manufacturing PMI. Then on Friday, we have the average hourly earnings and of course the NFP report, which are definitely going to be playing a significant role on how the sentiment in this market ahead of this event. Now, the big question now is, will gold's momentum keep pushing higher? Or will the US dollar build on its recent recovery and put gold under fresh pressure? In today's video, we are going to be breaking down the charts together. I will show you the key technical zones I am watching and talk about what opportunities might be on the table for both buyers and sellers. But before we proceed, it's important to mention at this juncture that everything I share here is simply my personal take based on experience and what I see on the charts. This is not financial advice. Always do your own due diligence and speak with a financial advisor before risking your money in the market. With that said, let's get into it and see what gold has in store for us this week. So my first point of contact here is going to be on the 4 hours time frame. Of course, we all know we are within uncharted territory. And what I did here was to take into account the character of price action in the last 2 months. So we are talking of about 7 to 8 weeks of historical data. And if we do that appropriately, I was able to identify a couple of structures to work with. The first thing I notice on this chart is the fact that the momentum is strongly bullish, and we have a beautiful ascending trend line to emphasize this. As you can see here, this is my major ascending trend line, which I will be using for this week. And of course, you know how we use our ascending trend lines. As long as price action remains above them, we will continue to look out for patterns and structures that support buying ideas. Now, with the way things are going here, you will see that since price broke out of the structure, I think during the mid-month of April, we've seen price maintain its momentum above the structure. And this led to that record high we saw last week. And interesting enough, we saw price come back into that trend line. And as soon as price tested that trend line, we begin to notice buy pressure resume from that area, showing us tendencies that this trend line is likely going to be respected one more time. And taking a closer look at the structure, let's take this ones out. Taking a closer look at the structure, you will begin to notice a potential reversal setup around that trend line we see here. So let's take this pullback into consideration. So we had a pullback, right? Price dropped into the trend line, and we saw this sort of reversal pattern gradually unfolding, though it is not yet validated. But for me, it's looking more like a potential double bottom structure where the neckline of the structure may be somewhere around the $3,360 area. Not until price breaks out of that structure can we actually validate it to be a reversal setup. But the fact that price is respecting this trend line for me is a positive signal that we are likely going to the upside. Now, to help us navigate the structure next week, I am going to be placing my key level for next week at the 3,260. Remember, this is a very strong support line I showed you earlier. We saw what happened when price came into that structure. In fact, prior to that, we saw the structure becoming the platform that sent price to hit that all-time record high. Then we saw multiple retests confirming that buyers are getting stronger. And for me, this could be a good signal that we may see price continue to the upside. And of course, you know how we use our key level. As long as price remains above them, we'll continue to look out for patterns and structures that support buying ideas. So as soon as the market opens, I am going to be placing a buy from this particular area and probably having my stop loss way below the 3,260, giving enough breathing space for price action to move around. So going into next week, I am going to be bullish biased on this one since price remains above both the trend line and that key level. However, if the opposite becomes the case, that is, sentiment begins to shift in favor of the US dollar, maybe as a result of outstanding figures from these economic events, the only condition that will make me sell is to see price break down, retest both the key level and that trend line, after which I will be looking for selling ideas. And of course, maybe TP target around the second ascending trend line, dovetailing to over 1,000 pips to catch them if price moves in that direction. So as you can see, our center of focus for next week is going to be around the trend line and that 3,260, where depending on how price reacts to the structure, break down or maintain above it will determine what direction price will be going in the long term. So there you have it, my in-depth look at the XAUUSD for the week ahead. Trust me, I will be with you in the comment section of this video to give you an update on what I am looking at after monitoring the character of price action around this area during the early hours of the new week. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. And if you haven't yet, consider subscribing for more insights, weekend market prep, and updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.